When is the right time to invest in a multifamily syndication? Whether you're brand new to real estate investing or have been investing in other types of real estate assets, this is probably one of the most common questions I get asked. So in this video, I'm going to cover 5 signs that it's time for you to invest in a multifamily syndication. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 13-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about the 5 signs it's time to invest in a multifamily syndication. Reason number 1 is you are sick and tired of the wild rides. And what I mean by that is, has anybody looked at the stock market lately? We have major downs, we have major ups. It's all over the place. And if you're somebody who values stability and predictability in your assets and your investments, well, you definitely should consider investing in a multifamily syndication. The reason is CBRE released a study where they took a look at multifamily real estate and other real estate assets and looked at how they performed over the past number of recessions. And they found that multifamily was the most stable asset class. It had the least amount of downturn, and then also when the market picked back up, it exceeded the previous peak faster than all the other real estate assets. So rule number 1 of investing is don't lose your capital. Everything always looks rosy when the market's going up, but what really matters is how that asset performs when the market goes down. And this is why multifamily is so incredibly stable. History is a good indicator of future performance, and multifamily has performed exceptionally well in market downturns. So if you're tired of the wild swings like this all the time, well, multifamily is an investment for you. Reason number 2 is cash flow. Equity is great, but if it's all tied up, we can't use it. Cash flow is something we can use to fund our lifestyle and all the things we want to do in life. So if you value cash flow, you definitely should consider multifamily real estate. The reason is stocks are not paying great dividends right now. The returns just aren't there. And if you're investing solely in stocks, you're missing out on a whole ton of cash flow that multifamily real estate provides. The other thing is, let's say you're investing in single family homes. If you're investing in duplexes, triplexes, residential real estate, the cash flow, the rental yield is not there. The price of the asset has gone up so much. The price of the rent you're getting hasn't really kept pace. So the yield has diminished significantly over the past number of years. So you might be equity rich, but you're definitely cash flow poor. And cash flow is essential when we're investing in real estate. So with multifamily, we benefit from the economies of scale. Instead of having 2 units where one tenant moves out, we lose 50% of our revenue. Imagine owning a business and overnight you lose half of your revenue. Well, it's actually happened with a whole lot of people with coronavirus, and this is why we have so many issues and problems. Business can't survive if your revenue gets cut. Same thing with your real estate portfolio. Look at it from a business point of view. So with multifamily, let's say you have 100 units and 5 tenants move out, the cash flow supports it. It supports the property, and it's a lot more stable and predictable, like I mentioned in reason number 1. So if you value cash flow, if you're looking for strong cash flow from your investments, definitely consider investing in a multifamily syndication. And reason number 3 to consider a multifamily syndication is if you are paying way too much tax. Let's say you are doing stocks right now and you're actively trading. Well, that is active income. Let's say you're flipping houses right now. That is considered active income. We really need to take advantage of the capital gains tax laws, where it basically allows us to pay a whole lot less tax. Plus, with the multifamily syndication, because we're dealing on such a large scale, we can take advantage of something called cost segregation. Cost segregation is basically where we strip out everything not related to the actual building so we can depreciate it faster, which means you get to take advantage of paper losses on day 1 that basically wipes out a big portion of your tax liability. It all comes down to the time value of money. I would rather have more money in my pocket on day 1 rather than spreading out that depreciation over the next 5, 10, 15, 25, 30 years. That money in my pocket today is a whole lot more valuable, and I can do a whole lot more with it. Multifamily real estate, and even real estate in general, commercial real estate, is exceptional for minimizing your tax liability. So if you're a high income earner, lots of investors really enjoy investing in real estate, not only because of the stability, the good returns, the cash flow, but because they can really manage their tax situation and pay a whole lot less tax. And reason number 4 is financing. Let's say you're somebody right now who's building a residential real estate portfolio. You're doing duplexes and triplexes. There will come a point in time where you no longer fit inside the lender's box. Lenders have parameters that they like to have their borrowers have, and if you're acquiring a lot of property, you will rapidly exceed that box in their criteria. I went through this too when I was investing in single family real estate. The reason is the lender is looking at you to shoulder the liability and support the debt payments for all those properties. No matter how strong your income is, at some point, the lenders won't want to deal with you. This is the reason why scaling a single family portfolio is so incredibly challenging. On the multifamily side, if you choose to invest in a syndication, there are so many benefits, like I already talked about, the strong cash flow, which a lot of people are not getting right now on the residential side. The tax side, with cost segregation, doing a single family portfolio, it usually doesn't make sense to do cost segregation, but the scale with multifamily brings a whole lot of benefits to it. So you are able to invest in a syndication and realize that strong cash flow, the appreciation, the forced appreciation, take advantage of how commercial real estate is valued with the income approach. And I'll put a link right up here to a video I did explaining how the income approach is used to value multifamily real estate. So if you're having trouble financing your single family portfolio, look to syndication, because the sponsors, the syndicator, will be in charge of getting financing for that property. And there are so many advantages to commercial lending, like interest only periods on the mortgage, non-recourse debt, all these things. I have many other videos on my channel where I go into these in detail. So if you're having trouble scaling your residential portfolio, add more units to your portfolio by investing in a multifamily syndication. And sign number 5 that it's time to consider investing in a syndication is a lack of capital. What I mean by that is many times people want to invest in a multifamily deal. They know all the benefits that come along with it, but they lack the capital to do it on their own, and especially the resources and the deal flow and the team to do it on their own. A lot of investors, they'll invest $200,000 or $300,000 in a deal, but if they were to go out and try and replicate the same deal on their own, they wouldn't be able to. They wouldn't have the network to source the deal. They wouldn't be able to underwrite it. They wouldn't have the team to manage it. They wouldn't have the experience to ride it through the hold period. And they wouldn't have the capital up front to actually acquire the property and improve it. So instead of taking that $200,000 or $300,000 investment and buying a single family home that comes with all these disadvantages, consider syndicating. You already know the benefits of it, you want to do it, but you just don't have the resources to do it on your own. Multifamily real estate investing is a team sport. There are so many people out there who want to take advantage of all the benefits that come along with investing in multifamily, but they can't do it on their own. They don't have $10 million that they can go out and acquire a property all by themselves. So we pool investors together. So all the investors here will pool their funds together, and they'll be able together to take down a much larger deal that comes with more cash flow, more upside, more stability, because the more units you have, the more the risk is spread around on that property, the lower your expense to gross revenue ratios, all that stuff. So many benefits. Actually, what I'll do is I'll put a link up here to a video I did explaining how a syndication is structured. We have 2 different sides, the general partnership and the limited partnership. I'll save that for that video. Go check it out if you're interested in learning more about how that works. But if you want to get involved in multifamily real estate, but you just lack the capital and the resources to take down a deal on your own, but you have money to invest, definitely consider a syndication. I hope you found this video useful, and if you're interested in learning more about the deals I'm currently looking at, head on over to callseth.com and set up a free 20-minute phone call. And if you liked the video, leave a comment, let me know what you think, hit the like button. It really helps out the channel. I do appreciate it. And until next time, happy investing.